And we're live. All right. Hello, everyone, and welcome to This Week in Crypto. If this is your first time here, this is a weekly panel where the Santiment team and community members kind of gather around and discuss the recent crypto market events. We do it from a more of a fundamental perspective. We look at the interesting market insights and analysis that we've sort of uncovered using our own in-house built metrics and indicators. So if you haven't used Sentiment before, there's a link to our site in the description of this video. Basically, what we do is we develop tools and custom metrics, indicators, and strategies using a combination of information sources. So that includes both the pricing data, but also the on-chain activity, social media activity, as well as the development activity of any cryptocurrency project. To help you better understand the crypto market and the behavior of its participants, it's important to look at every coin and every market event from a multiple perspective approach. So I suggest checking out sentiment.net after or during this call. And also join our Discord because we talk about this sort of stuff pretty much every day on our trading channels. So if you don't want to wait until Friday to hear about what's going on in the realm of on-chain and social data, feel free to join our Discord anytime. So without further ado, Brian, I think you're already sharing your screen, so I'm gonna let you take us away.
Yep, thank you, Dino, and happy Good Friday to everyone. For those of you who celebrate, you may know that the stock markets are down today, and with that, we can't really show you an update on the correlation to the markets today, but we can talk about what's happening with a lot of the crypto assets that have been on the move this week. You've seen a lot of altcoin fluctuation and decoupling and then recoupling throughout the week, and we're going to get into that today, especially with the fact that our Bitcoin metrics are actually down for the last couple days, and we apologize for that. So we'll be making up for it by taking a deep dive on, like I said, many other altcoins to see what's going on with them, what may be popping in the near future, and what may be coming off the top. So we'll dive right into it here, and I'm going to start with Ethereum daily active address versus price divergence model. And for those of you who tuned in last week, we were showing that we were seeing some of the highest threshold crosses in the past 2 years, if not the entirety of Ethereum's history. And with that meant that we were likely going to see a price rise to compensate for the amount of daily active addresses that were basically being maintained since the fall of Black Thursday here. And when you see a huge price retracement, but fundamentals staying basically where they were with a key metric such as daily active addresses, that's generally a good sign that it's a great buy low opportunity. And that pretty much played out to a T here as we saw a rise from a low of, I think it was in the 80s or so, 85 if someone wants to correct me on that. But it went from there all the way to a high of about 175, 176. Before retracing back to where it is now at about 158 to 159, depending on the exchange you're looking at. You'll notice as that rise has happened, once it crossed about 140, the thresholds, basically anytime that threshold crosses 0.5, which is the correlation between daily active addresses and price, a signal is shown here. But when it's under, that signal goes away. And after it crossed that 140 mark, the signals basically went back to neutral. We're by no means in a red territory where it's suddenly overbought, but we are basically neutral, which means the party of it just constantly going up due to an excess of daily active addresses is mostly over. So if things continue to climb, it will be because daily active addresses continue to go up, or obviously there can be plenty of other fundamental ways that can cause Ethereum's price to rise, such as whale activity, NVT, token circulation, that kind of stuff. So wanted to update you guys on this. And unless there are any comments, I'm going to jump into the next topic here.
By the way, there is this interesting short-term price action that happened actually this week around MVRVs and Ethereum. So let me know if you want me to elaborate more about that. I mean, actually, I was tweeting about this this week, where we were reaching some quite high levels of price action for Ethereum. and it actually dropped after that. But yeah, let me know if this is the time to look at that. Or
Please.
Yes,
We
go
can
ahead,
jump in
Raul.
with your
I remember you were quite on spot.
Yeah, I saw
a little
your
bit. I was a little bit teasing you, not
Yeah.
teasing. I said that we need to wait more, but at that time you were right. Yeah.
I saw
So-
your tweet, Val, saying that you closed your short position a bit too early, it seems.
Yeah. I actually leveraged shorted the market at 172 because
Wow.
I was afraid that we might be approaching very high levels. So that was on the morning of the 7th. So let me tell you what was my thought process here, exactly looking at this chart. So when I looked at this chart, what I saw is that the biggest MVRV here is the 30-day MVRV. If you look at it, and it's even true right now. Like if you look at from the MVRV value there, the 30-day one is the biggest one. And this is actually a very interesting phenomenon because this means that the short-term holders are at quite a profit at the moment. And when you look at this MVRV historically, you're gonna see that 20%, above 20% is actually quite a high value. And on the 7th, when I looked at it, it was actually, I think it was going down, like the MVRV started to go down on the 6th. Yeah, so
Brian, do you want
here
to
it was,
just let Val share? Maybe it's easier that way.
yeah,
Sure.
actually, I'll share my screen and that would be easier. Okay. Okay. So this is the MVRV for Ethereum, and you can see here that the biggest value is 22% for the 30-day time band. So it seems like these guys, like the 30-day, the coins that are in circulation for the last 30 days, these are the ones with the biggest profit. So if we drill down into that, let me change the color because I guess, yeah, it's going to make it, oops. Okay. So on the 6th, we reached levels of like 23%. And then on the 7th, I was looking at this metric and it looked like the price continues to push up. So it was like at $172, but the MVRV was starting to go down. And at that point, I thought, well, we're approaching very high levels of this metric. Historically, 23% for the 30-day MVRV was quite high, and the short-term holders are starting to dump on the market. So at that point, I was afraid that we are approaching a local top, and there will be just like this price hike was just too steep, and there will be people that will be realizing profits. And this is when I decided to leverage short the market. It actually started to go down at that point, and it reached like 165 or something like that. So it was possible exactly on this particular day to realize like a 10% profit. But I decided to wait a little bit more, and then the market went into a sideways mode. And yeah, so it's at some point I decided to close it because when I did some back testing, it turned out that 22% for this metric sometimes could lead to again to some price jumps even at these high levels, like to approach like 35%. So at that point I was not quite sure that the market might become too irrational, and I just closed the short and but kept 2/3 of my cash into stable coin. And now I managed to purchase back at 165, and I hope I'll be able to purchase at 155, but we'll see. So indeed, the market corrected for this high level of MVRV and went down. So that was a kind of interesting event. So my thoughts around these short-term MVRVs, like they could be an interesting indication for local tops. Like I would expect that if we approach very high levels of this short MVRVs, there will be a correction, and then potentially the market could continue to grow, because the wonk ones, which are the long-term indicators, let's say the 1 year MVRV, is still low. It's like minus 5%. So in the long run, we should be going up from here. And if you want to just buy and wait for like half a year, now could be a good time to do this. But for the short term, you might be able to capture such kind of walkout tops looking at these shorter terms MVRVs.
So Val,
Yeah,
it seems like
interesting.
the 30-day MVRV is still fairly high, like with the latest sort of rebound or bounce back. What are your thoughts? Do you think that historically, 22% you mentioned, sometimes it can lead to a higher high still for the price?
I think right now this MVRV is not updated for the latest price action. You can see here that the latest price we have recorded is
Oh, yeah.
170. So once this metric is computed for these lower price levels, it's going to go down. Actually, we are currently working on a 5-minute resolution for this metric, because I think for such kind of walkout tops, such kind of capturing such kind of short-term price action with MVRVs, it's essential to have this 5-minute resolution. And once we have it, then it will be possible to react much more quickly on these swings.
Mm-hmm. And is it still the 30-day MVRV ratio that is the highest? I assume so, right?
Yeah, so right now, at least at this $170, it's indeed the highest one. Yeah, we're gonna see once it updates for the latest prices how it's going to change. But it should drop, I would suppose, at least 5% from
I
here.
think you can check it
maybe more.
in Sandbase if it's maybe over there it's updated still or already, because I think the price section is, and I don't know if MVRV is maybe also
It
updated.
should be pretty much the same. So I would not expect to see it updated there. Oh, actually,
Yeah, there you go.
it is. Oh, okay. Well, it's 14% now. So yeah, 1.14 means plus 14%. So yeah. So which is a kind of a healthy level. Like if you look at the historical levels, you're gonna see that yeah, like the biggest, for example, during the latest rally at 270, we reached plus 34% MVRV. So this is like pretty high, like above 30%. Here on this walkout top, it was 22%. So it was again like above 20. So that was again like a good indication for approaching top. So yeah, like the more this short-term MVRV approaches above like 25%, like 30%, the more the risk we are going to see a drop from here.
Mm-hmm.
Hey Val, would you mind clicking on all for a minute so we could see it in a full zoomed out perspective?
Yeah.
So I guess ignore at the very left there because that's an outlier, but historically I'm noticing that 35, maybe occasionally a little bit higher percentage, or 1.35 in this case, that has tended to be the norm for about the last 2 to 3 years almost. So
Yeah.
it's actually quite telling that peak is right around the time where you see a lot of local tops forming.
Yeah, so I think we can split the history of Ethereum generally in two sections. One will be before the big pump to $1,000 and one after. Because I kind of feel like this period here, especially around the big bubble, it was like huge irrational market. So as the market matures, I kind of feel like for example, these levels here at like 56%, 58%, most probably we're not going to see these anytime like anymore, because it's just the price action has become much more mature. there is much more liquidity on the market, much more participants that will be trying to trade these swings back and forth. So since this big pump, we actually haven't seen a lot of times when this short-term MVRV went above 30. I think it was probably around here. That was $340. That's middle of 2019. So yeah, mostly it reaches levels like 20-something%. So this is why when I looked at it and I saw like 20+%, I was like, this doesn't look right. Like this, we are just having too big risk here at these price levels. We need to have a correction in order to have a healthy levels of MVRVs. And just to know what is the rationale behind it, like the MVRV shows you at what profit right now the market participants are. And you're always going to have these short-term players that will be trying to realize their profits in short time span. You know, these traders that will be willing to realize like 10-15% profit in a week, and they'll be fine to walk away with it. So this indicator, I believe, it will be oscillating between these like plus 30%, minus 30%. Like it's a kind of an oscillating indicator.
Cool stuff. Yeah, in theory, I've noticed that the longer an asset's existence has been on the longer it's been publicly traded, the less fluctuation there is their numbers. So it doesn't go up to something like 1.6 or 0.4 anymore, because the Ethereum's being traded for 5+ years now. You'll see more minor fluctuations like 1.3 or 0.7 being really good indicators for the tops and bottoms now, because as you said, the more saturation and market cap that a coin has, the more the less likely it will be able to have those extreme outliers.
Yeah. For example, Chainlink will be probably falling into the category of a relatively new asset that's been really volatile and turbulent compared to Ethereum. Like I think there is no question that Chainlink is much more volatile than Ethereum. And we can see that the swings of the 30-day MVRV for Chainlink are actually quite bigger. And during this latest pump that happened, it reached 40%. So, but still, you can see that at 40%, the market kind of came back to its senses, and people started, just the sell pressure was too big. Well, we are sitting at 30% now, which is still quite high. So I wouldn't be buying Chainlink at the moment. It's just like at these high levels of short-term MVRV, it's just, I think it's too risky. Like, yeah, it just looks too risky to me. And we can see that historically, actually, this 40% MVRV for Chainlink was the highest that happened in the last 6 months. So, yeah, I mean, if you really want to take risks, probably that's a good time to short.
It's really fascinating, actually. Basically, what you're saying, Val, is very simple, is that for a lot of these coins, like for Ethereum and Chainlink, well, for Chainlink a bit more, but for Ethereum, when short-term traders get around 20 to 30% profit, they start dumping. And when you see that on the MVRV chart, it's basically a very bad signal for the short-term price action, right? That's pretty much in a nutshell.
Yeah.
Yeah. Makes total sense.
I would say, Dino, that we're getting closer to unify our, at the moment, different approaches. Yeah, one is surveillance behavior, which we used to apply quite successfully when seeing the dumps on smaller coins. Yeah, and another MVRV, because on MVRV it works very good for decentralized distributed tokens where no one can really impact market so much, like Ethereum and Bitcoin. So this is not, you cannot find a player who, if he dumps, like everything's gone. Now on the smaller coins, we take a smaller group of people, and we track when they move the holds into exchange. Here it's the same. It just we aggregate across an average draw because they do represent in the same way what might happen next. So I'm just thinking, okay, anyway, it's a very good topic for research. If this what is the border, or what is the border between Ethereum Chainlink? Is it like on the Ethereum side with MRV, or still on Wales monitor? Yeah, I think Chainlink already going closer to Ethereum. Yeah, just because of it's a big and valuable and quite distributed, and many players already. We don't see there so many whales. Yeah. Anyway, just want to mention that my brain working lately in this direction.
Yeah, I get what you're saying. Agree. Val, what is like that chart looks fascinating. What does that mean? Like there's a MVRV third day MVRV dropping, even though the price, I mean, it dropped a little bit, but it was pretty much consolidating. And then the amount of data going to exchanges has spiked at the same time. So is it basically like short-term holders moving coins to exchanges to sell, even though the price was kind of still in the consolidation phase?
Yeah, so this is because I heard some discussions on our trading channel about data, and I decided to just look at this combination of metrics of the short-term MVRV and the tokens on exchange, and you can see that actually data, it's like compared to Chainlink, that will be even more volatile coin that could be impacted by like whales and stuff. And you can see that it reached some just crazy levels of short-term MVRV, like 90%, which yeah, like as we said, it's not generally good. And it's interesting, this correlation, how even though the price stays relatively stable, the short-term MVRV goes down, and at the same time, the amount of tokens being put on exchanges also increases a lot. So my explanation for that will be that we have this probably long-term whales that has this coin stacked up, like from before, and they are dumping now on exchanges. And even though the price kind of stays the same, which could be really caused by a lot of FOMO going on right now. Like there will be probably people trying to jump on the price action. So I guess the trading volume is also going crazy. Most probably, yeah. Although it's decreasing right now. But yeah, it's the price level stays the same, but the short-term MVRV goes down because people are realizing profits. So it's yeah, it's very interesting relation between these metrics, like how things unfold for these smaller coins.
Yeah, actually, crazy chart.
But yeah, but definitely, like at these high levels of short-term MVRV, like you shouldn't be buying at that. It's just too risky. Like really too risky. Like good time to buy, especially if you want to do a like short-term price action, will be when this ratio is below 0, or below 1 in this particular case. Like for example, for data here, you can see it was like minus 70% at the very dip, and then it started increasing. So it was a good time to buy until, I would say, yeah, just before this dip here. Not dip, but this pump here.
Mm-hmm.
So that would be, yeah, like here was 18th of March was probably the last time that it was not so risky. And then when it jumped so much, like this is not the time you want to participate on the market. It just becomes too risky. Every time, like every moment, there could be someone coming and dumping on your tokens, and the prices can go down. It's I mean, it's just measuring the level of risk. Nobody really knows what is going to go with the price. Like, and especially for these smaller coins, you can have big market manipulations, pump and dump groups. So everything can happen, but it's just a matter of measuring your level of risk, right? And deciding, okay, is it now very risky to buy, to sell, or whatever? And this could be a good metric to measure that.
Definitely. Okay, cool. Thanks for sharing, Val.
Yeah.
On that MVRV note, Brian, did you have anything else that you wanted to go over?
Yeah, I had a little MVRV long short diff update for everyone, which would segue well into what Val just showed here. All right, so this model, if I can get this out of the way, this model here measures some key ERC20 tokens and looks at their long short diffs, which is more of a macro way of looking at how these tokens are doing for the long term and whether the average investor is above or below profit. See here is since the beginning of the year, we had most projects, if not every single one, outside of maybe this one here, Maker was just above, being under profit. And then when the market started to climb in mid-January, you started to see some separation from Chainlink, which we talked about, as well as Kyber Network, and then a few others like Augur, which all had huge Februarys, right? And then Black Friday happened, or Black Thursday happened right here. And that's when everything dropped back below outside of a couple. And if you look over the past week or two, Chainlink and Kyber Network have maintained their status above profit, while all the other ones have gradually declined even more under profit, which shows that when you see a rise like Chainlink had earlier this week, it may be sort of fool's gold for people because of the fact that overall the average profit is still well into the green for Chainlink's MVRV long short diff. And that's partly because it already has had such a great year to start out after a huge February, where it was pretty much the number one talked about altcoin for a long time. So when you look at something like the 30-day MVRV, it's great for more short-term trading. And when it's backed up by something like this for a long-term perspective of MVRV, it's kind of just a nice validation that it's okay to take a little profit in that case and put it in something that might be a little undervalued or has most people in the red, such as Maker here, which, as many of you know, it dropped all the way to below 200 after Black Thursday. It had a really rough March. And it's gradually recovered since, but you'll notice that not many people are profiting off of that because the long short diff value is staying low. So this is a really cool model, and anyone with Sandbase Pro would be able to access this and sort of do some direct comparisons of several different ERC20s and see what might be undervalued versus overvalued from a more macro perspective.
So
on that
just
note,
quickly on that model, Val, correct me if I'm wrong, for the MVRV long short difference. So basically, for those unfamiliar with the model, it takes the 30-day and the 1-year MVRV ratio, and it basically plots the difference between the two. So when we see the MVRV long short difference go above 1, Val, does that indicate that long-term holders are sort of compared to short-term holders, they are basically more in profit, or is it vice versa?
Yeah, so it's so the idea behind this metric was to capture like two different periods in the cycle. One period will be when we are in a bear market, and in that case, the long-term holders are at loss generally, and the short-term holders are starting to realize profits. So the short-term holders are kind of playing the music at this time. So this is when the long-short MVRV, like it's kind of a ratio, but like the long-short MVRV value is below 0. So we are kind of in a bear market at that point. When we go into a bull market, then we see the long-term holders are starting to be at profit at that point, and the short-term holders are not driving the music anymore. So this is when we are in a kind of a bull market in that case. So the main idea is to be buying when the long short term is below zero, and to try to sell when it's above and when it approaches some high levels of being above zero. This is the main idea.
Yep. Yep. Just
And
working
it can be a little misleading at times too, because we're still discovering that when it does make an initial cross above zero, we often see a surge, right?
Yeah, so we've seen that for Bitcoin, definitely.
Right.
Which is like the coin with the most history, with the most volume and all that. As we look at shorter lived coins like Ethereum and like below that, it starts to become a bit more volatile and not so, like the trends are not so well defined, I would say, especially for these newer coins like Chainlink,
Right.
Kyber. It could be much more volatile metric.
Mm-hmm. And for the record, it looks like Ethereum is at about negative 10.5. And as of a couple days ago, when we last had Bitcoin's data, it was at about negative 13.25. So they're both under right now, and they're still looking like they are good buy candidates.
But this is for long, so this is definitely a long-term indicator. So
Right.
don't expect that you're gonna buy today and become rich tomorrow. Like that's not gonna happen. Like the short-term action is gonna take time for sure. Like we're talking about, I don't know, here it's an indicator that it's at least 6 months, I would say,
Yeah.
if not even more. So really long-term indicator. It's
Cool.
very
Thanks, Val.
interesting when it becomes very high, and this is actually happening when the MVRV, like the long-term MVRVs are very high. And this is the time that you don't want to buy. But I don't think it's also, it's a long-term indicator. So if you want to buy and hold, you try to look at this indicator to be below zero.
Yep. Makes sense. And so we look at something like Chainlink here, it's still above at about negative 12.2 right now. So it's coming back down slightly, but still has a ways to go for the long term, 6-month window of time, like Val has said. And when we look at that in comparison to its social volume here, which I have up, we can see that for the short term, if we look at a 6-month span and we look at the latest over the past week, we saw a very familiar looking social volume spike that was pretty close to the one that we saw right here about a week before Black Thursday, and then right when
Brian,
Black Thursday
do you want to plot it against the price of Chainlink just so we can better see the correlation? Because currently it's against the price of Bitcoin.
Oh, thank you. Of course. All right, so here's a
There
little
we
bit
go.
more accurate of a representation here. Green line is the price. We have the social volume here at a peak, and then we have the price here. Let me see if I can zoom in and show it better. Yeah, so we had kind of a triple spike in social volume here as Chainlink rose up. And the biggest one was right before the top, and then we had the crowd start talking about it right after it topped because they thought that it probably would keep going up, and it did not. It actually started to sort of come back down immediately over the past couple days, and it's kind of staying where it's at, and social volume is kind of tapering off here. So this is a good example of something that you can look at when you're seeing one of your assets really start to climb and you're trying to find where a good time would be to take profit.
Yeah.
One of many examples here.
So this is a good point to raise here. If you go to Insights, I wrote about Chainlink a few days ago when we initially saw this. So this first of the three spikes in social volume, basically is when I started paying attention to Chainlink. And if you go to the main insights page, Brian, just so we can see kind of the performance of links since I wrote the insight. So basically, we saw the social volume of links starting to rise quite heavily in a very short period of time, and it was correlating with the price going crazy. Yeah, so it's I basically said in this article that the top is very near, and it's already 8.2% down since the article went up. So basically, one of the indicators that we used in this analysis to show that the top may very well be close is the fact that Chainlink has ended up or appeared on our list of emerging trends, which basically means that a lot of people are starting to talk about Chainlink. And when that happens, especially when a coin is in an uptrend, it usually indicates that the hype is about to peak and that the price correction might be imminent. And actually, while I was writing about it, so Chainlink started on our it appeared on our list of emerging trends. There's 10 words. Basically, for those of you unfamiliar with our emerging trends, what we do is we calculate the top 10 words for every hour. We calculate the top 10 words on crypto social media that are gaining the most social volume relative to their 2-week average, previous 2-week average. So basically, what we're trying to do here is we're trying to figure out which words and which topics on crypto social media are getting the most traction at any given moment. So Chainlink, a few days ago when I started writing this article, it appeared on number 7, which meant that it was starting to gain ground again, among the crypto community, but it wasn't like the most talked about topic at that point in time, and that was the first of the 3 spikes. So while I was writing the article, it rose up to number 4. And that's where it stayed as I was writing it. So I said, the social volume is starting to rise. The fact that it's appeared in our emerging trends is worrying. And then Max told me, it is worrying, but it wasn't in top 3. So Max has this idea or this theory that when we saw a coin appear in top 3 in our emerging trends list, that's when pretty much everybody's talking about it. The hype has peaked, and that's usually the most bearish signal that you can take as far as social data is concerned. And so a day later, which correlates to that biggest spike after which the price tanked almost immediately afterwards. A day later, Chainlink reappeared on our emerging trends, and it was at number 2, and that was the ultimate top. So it's actually yeah, there you go.
Nice. Yeah.
But that's basically how we, how you can use our platform to try and capture tops based, exclusively on social data. Like I was looking at Chainlink's on-chain data today just to figure out, were there any other sort of precursors to this dump or correction? There is one. So if you look at Chainlink's exchange flow, you can also see that it has peaked right at the last top. So basically, as more and more people started taking profit and deciding to move their link to exchanges in order to take advantage of the rally, Chainlink sort of started plateauing and then eventually dumped. So the combination of more coins being moved to exchanges and the hype around the coin peaking, which you can tell on our social data, it was pretty much a nail in the coffin for Chainlink's price action, at least short term. I think Chainlink is a pretty good prospect long term. Personally, but short term, it was, it wasn't meant to be. So, Brian, if you look at the last, let's say, 90 days, and better to look at the exchange inflow and outflow separately because it paints a better picture. So go out of that one. Yep. And then right below that. Yep.
This one, oh, right here, right here.
Right there. Yep. So last 90 days, I think.
Yep.
Yeah, it doesn't. I think it doesn't update for every chart. So just select the last 90 days again. There we go. And then plot the price of it. Okay, and you can actually, so this is, it didn't yet account for the dump. So if you actually zoom in just a bit manually, instead of choosing a range, I think it will show you. So let's say from the maybe early February, actually, can I share my screen? I think it will be easier. And
yeah.
Yeah, just so I can show you what I mean. Okay, entire screen. Allow. Okay, here we go. So we're looking at the total amount of a link moving to exchanges over the last, let's say, 3 months, just so you can kind of see what I'm talking about. So let's say last 90 days. Yeah, but then if we zoom in a bit, it should, yeah, there we go. And then it accounts for the drop as well. So if we look only at the exchange inflow, there you go. So the biggest inflow of link to exchanges pretty much since the drop has appeared right at the very interim top. Basically meaning, that we're seeing more and more people starting to dumpling on exchanges in, probably expecting the drop to come soon. And, it kind of correlates with the MVRV that we just saw for Chainlink as well. The 30-day MVRV was what, like 90%. So people were pretty much already very much in profit, short-term holders at least. So I would assume that a lot of that this spike is a lot of short-term holders finally, selling their coins and realizing profits. So this sort of spike here, plus the general sort of social volume, which we can see here, I think it's a very clear signal that something is wrong with the coin, basically. Not wrong, but that something is going to happen with its price fairly soon. So let's look at the social volume. There you go. Right on the top. It's this is when I started talking about it. So it wasn't actually when I wrote an article. It wasn't just there yet. It started appearing on our list of emerging trends, but it wasn't at the top. And this is when it reappeared, reemerged as the pretty much biggest talking point in the crypto community at the moment. And right afterwards, we saw a correction. So very very clear for those who know where to look. Okay. We have around 15 minutes left. So Brian, if you wanted to share something else, do you want to take over, or was that pretty much it?
Yeah, that's my last topic. Why don't you go ahead and take over that last 15 here?
Sure. I actually wanted to look at the correlation of Bitcoin and the traditional sort of markets today and over the last few days. So if we look at the S&P, so this is, oh, is it bugged? I thought that I was, huh. It, it used to work like maybe a few hours ago.
It's
So,
because the markets are closed today. I think that's why.
oh, is it? Okay, it could be.
Yeah,
Okay,
because it's Good Friday.
yeah.
The Yeah, I mean, if you extend the price, the time range, the prices are, yeah. Gold is traded 24/7 because I think we capture some futures contract or something. But S&P, it's traded only on work days.
Right. I think this is what I've been looking, because I was reading on Twitter some people basically complaining how the S&P index was rising even though Bitcoin was plateauing. So I don't know what the correlation currently is between the Bitcoin and S&P, but it's actually interesting that as far as I can tell, this is the first time since the drop that we're seeing the um, sort of a decoupling, so to speak, between the S&P and the crypto markets. Basically, the crypto markets, if we use Bitcoin as a proxy for the general crypto markets, they're a bit down on the day, and over the last few days, they're basically been consolidating. But the S&P index has, I think, been rising. Brian, you mentioned that the stocks were down today. Is this then not updated?
No. The stocks are off today completely.
Oh,
They
you
don't
mean off.
trade
Right.
on
Yeah.
this level. Yeah.
Okay. So yeah, this is just something interesting that I wanted to mention is that we're seeing before I guess they stopped trading today. We saw a rise in the S&P index, at least relative to Bitcoin, and this is the first time since the drop. So something to keep in mind. Same thing with gold. We saw gold kind of rising even though despite the plateauing crypto scene. Okay, one other thing that I wanted to check. So we were talking today. We were talking about various stakeholders. We were talking about the crowd and how you can kind of track their behavior through our social metrics. We were talking about the MVRV and how you can basically track the behavior of different speculators, short-term and long-term speculators, through those metrics. I also wanted to pay a bit attention to two other very important stakeholders for the Ethereum ecosystem, one of them being the miners and what they've been doing over the last few days slash weeks. So if we look at this metric, basically calculates the total cumulative balance of all Ethereum mining pools over time. This is looking at the last 6 months. And what we can see here is that miners have at least, when we're talking about this February run, we saw miners basically selling somewhere in the middle of the run, started to sell somewhere in the middle of the run, as Ethereum was, I think maybe here it was already maybe 30%, gained around 30%. And we're starting, I think, to see a similar scenario unfolding once again. So for the first time since this top in February, we're starting to see Ethereum miners offload some of their holdings once again. Not a whole lot. So it went from 1.159 million to just 1.153. So that's what, 300,000 Ethereum, I think, or 30,000. I'm actually not sure. Val, is it 30 or 300?
I think it's 30.
Yeah, it should be 30, right? So around 30,000 Ethereum offloaded from the miner addresses. So in short term, I think Max, you would agree that this is probably not a bad signal for the Ethereum. Like especially if we can even look at
mid to long term.
Yeah, yeah.
It's never a short term signal. It's you see they start acting. Miners and big token holders. I don't know if you are going to show it or not.
Yes, that's next.
Yeah, exactly. So their, let's say, business or profit model, they live in earlier the market because they don't need to chase the top. So they're leaving first, then crowd kicks in, and then crowd makes the final top. And well, of course, it doesn't work like 100% of the time, but at the moment, it's our working theory. That's why yesterday in our Paywall Insight, we actually discussed it quite in details. I think Gary wrote about it.
Yeah. You can check that on the Sandbase Insights. Gary wrote about this particular topic.
Yeah. So I still keep it as an assumption at the moment. Okay, we see early signs of big token holders and miners leaving the market or like dumping it.
Yep.
I would suppose there is more way to go up. Yeah.
If you look at the last year, that seems to be the case. Like, let's look at the last two occasions where miners really, like, if we assume that this is not the last time or the amount of holdings that they're going to dump, if we assume that they're going to start dumping a bit more, and the chart is going to look like this in the next couple of weeks. So the last time it happened, actually, this is the last time it happened. They started dumping right around the middle of the rally. And then here we can see pretty much this same sort of behavior. So, from here to here, they were kind of accumulating. And then in the middle of the rally, they started dumping their holdings and then stopped right here at the interim top. And then pretty much the same thing here. So they didn't dump at the very top. They dumped right at the middle of the rally. So this seems to be sort of the modus operandi for Ethereum miners, that they're not actually chasing tops, or they're, maybe their offloading doesn't really affect the Ethereum as much. But usually or historically, we see that they start offloading their bags sometimes in the middle of the Ethereum's rally. And what Max mentioned is that we're also seeing some signs of discomfort around the Ethereum's biggest holders. So here we're going to look at the current or latest behavior of the top 100 non-exchange addresses, or the non-exchange addresses within the top 100 holders of Ethereum. So if we look at their behavior over the last, let's say, 3 months. So currently what we're looking at here is the price of Ethereum in green versus the total amount of Ethereum held by the biggest non-exchange holders in the last 3 months. So yeah, once again, we're seeing this massive dump in the total bags of the biggest Ethereum whales over the last, what is it, like 9 days? So it went from 21.4 million all the way down to 20.8 million today. So, not too shabby. That's around what, 600,000 Ethereum being sold off, or at least moved away from the biggest Ethereum whales over the last 10 days alone. But if you look at it previously, I think it's the same sort of action as with the miners. They're not really offloading at the very tops, but they start offloading somewhere in the middle of the rally, and then the crowd catches up and forces the actual top. Max, would you agree? You can see that here as
Yeah,
well.
yeah, yeah. I definitely understand. And whenever I make a quite sizable position, I do the same. Like, come on, I'm like, you did some profit. Of course, you're satisfied with if its profit is good enough. Like, there is not a single reason to try to chase the top, and they accumulate always cheaper. Miners, well, they keep mining, so there are enough coins which came to them cheaper.
Yep.
And big token holders, you see, they're buying before. They're always buying like at the bottom or close to bottom. They are the ones who are moving the market up. So they're living early too. It's fine. So
Yep.
it makes perfect sense once you understand it from behavior point of view. So we're trying now to see on the metrics when especially this case happens.
Yeah. So this is okay. So this is what we're seeing in terms of the biggest Ethereum holders. I also wanted to look at some of the retail sector, retail Ethereum holders. This is the chart that I'm not sure is currently live in our send data, so I have it saved here. So here we're going to look at the holder distribution across the entire Ethereum ecosystem over the last 6 months. This chart in particular shows the total balance of Ethereum held by addresses that are holding different amount of coins. So for example, if we look at this particular group, we are here looking at the total balance of all addresses holding between 1 and 10 Ethereum. And we can actually see, if we actually zoom in a little bit more, let's say last 30 days, over the last few days, we can see that even though there was pretty much a big accumulation period going on since late March 24th, it started plateauing over the last few days, pretty much as the top formed here. Similar behavior going around here, 10 to 100 coins. So these sort of retail categories are also have stopped accumulating and are currently sort of in a consolidation phase themselves. Let's see. Yeah, so there has been a bit more of an uptick in these are sort of mid-range holders already. So anybody holding between 100 and 1,000 Ethereum, I don't think we should call them retail. So mid-range holders are starting to accumulate more. Now this particular group is very interesting. So we're seeing, once again, these aren't the biggest holders, but they are, very sizable. So all addresses holding between 10,000 and 100,000 Ethereum, they have also started offloading their bags over the last few days. So it went from 26, their cumulative bags went from 26.5 million Ethereum to 26.28 million Ethereum. So that's 250,000 Ethereum also sold off by this particular group. So we're seeing, I think, some jitters in the market among various Ethereum stakeholders. So we're seeing slight sell-offs among Ethereum miners. We're seeing significant sell-offs among the biggest Ethereum whales, relatively significant sell-offs among Ethereum sort of mid-range to high range holders, and then we're seeing the plateauing of Ethereum accumulation among the Ethereum retail sector. So all in all, I think with this latest sort of bounce over 170, I think a lot of people are starting to think that or starting to fear that there's no more gas for Ethereum to run. This is at least how I'm sort of looking at these metrics. And if we look at if we try to figure out what the crowd is feeling, we can go to our social metrics for Ethereum. And if we look at the Twitter data for Ethereum, which is what our sentiment algorithm was trained on, so it's the most reliable sort of channel, and we'll look at the sentiment. So currently we're going to be looking at the crowd sentiment on Twitter as it relates to Ethereum. And over the last few days, as Ethereum has started rising, we can see a very steep decline in Ethereum related sentiment on Twitter specifically, actually going fairly into negative territory. So overall, or on average, we are also seeing, in terms of just the crowd's reaction to the latest price action, we're seeing that the Twitter crowd is getting more and more bearish in terms of Ethereum's short-term potential, at least. So definitely, I think on the charts, at least me, I'm seeing some FUD in terms of our on-chain and social data, which isn't necessarily bad for the price of Ethereum. Just let's make that clear. I think a lot of times, the fact that there's this sort of, fear and uncertainty about where the coin might go next, it lets it, chart some new highs. We've seen this happen very often with altcoins. So it might also be overall, it might be a positive signal for its price action, but something definitely to keep in mind from both on-chain and social perspective. Okay, I think, yeah, I'm done from my side because it's 4 p.m. here already, so we've been live for an hour. Anything else that anybody wants to share before I kind of close us off for today?
No,
So I don't know, what is the final verdict about where the price is going to go now?
Oh yeah.
Yeah, right. It's a pity we cannot yet promote our this test options. Or each of us would close one. Or I would bet for growth. Yeah, well,
You would?
bet.
From my perspective, I think there is still room to go down a little bit more. Like I kind of feel like we haven't hit this local bottom yet, but I think it won't be like a huge crash. So we might see a little bit more sell-off, but from there we should be able to reach to higher prices. So that would be my my bet.
Yeah.
Val, do you have a bold prediction on what kind of support level people might want to look at for a buy point, if there is going to be a little more?
Oh man, that's really hard to guess. I can say that, like, when we were at 172, I put buy orders at 165 and 155. I still haven't removed my 155 order. I'm kind of wondering, should I maybe push it a little bit lower, given the current circumstances, because we're very close to 155, and it seems if there is a bigger dip, it might break 150. So people that are more into technical analysis may be the better people to ask about it here. But if we look at like the MVRVs, it seems there might be space for I don't know, for like 10% decline. But yeah, who knows?
Yeah, based on some technical trading analysis I've seen on Twitter, it looks like a lot of people think this could go as low as the mid to high 140s, and that's where there was a lot of polarization and difficulty breaking up to 150 and beyond about a week and a half ago. So if we do get back there, I would imagine there will be some support level. And depending on how network growth and daily active addresses look and some other metrics, that'll depend on whether we bounce right off of it or perhaps can break through that.
Yeah, long term, I think we're gonna grow. There is no question about it. This big dump, it has a lot of space to grow from here. Short term, yeah, I think we might see some drops.
Yep.
And then it should continue to grow.
Yep, I agree. I think there's more down pressure to happen. I think we're going to be falling down a bit more just based on everything that I'm seeing on the charts. Very short term over the last next few days, I think charts are looking fairly bearish. But overall, shouldn't be anything as significant this year. So even like up until next Friday that we have the next call, I would not be surprised that we see levels similar to this one once again as a bounce back or even higher. But this would be my prediction, but not only just like a personal opinion rather than any sort of solid financial advice.
Yeah, sure.
Yeah. So, okay, I think that's going to do it for us today, guys. Thank you, everyone, for joining the call, listening live, or after we have done publishing this on our YouTube channel. If you liked what you heard, you liked what you saw today in terms of metrics and indicators, everything that we talked about today is live on santiment.net, either our Sandbase or Sanddata platform. You can get a 2-week free trial for both. So just go head over to santiment.net, fill out a form, and we'll get back to you. Also, if you would like to be a part of one of these calls in the future, head over to Discord. Let us know what you would like us to talk about. If you have specific, charts or coins that you think are very interesting in terms of its on-chain and social data, or you would like us to look into, let us know, and we'll maybe find you a spot for one of these calls in the future. But anyway, in the meantime, thank you everyone today so much for joining us, and everyone who have participated in this call and shared their own market insights. I guess the Santiment team is sort of bullish short term for midterm for in terms of the price of Ethereum. So I guess we'll see next time how accurate our prediction was. But yeah, I guess we'll have to wait 7 days before we can really say. Anyway, thank you all.
Thank you.
Thanks, guys.
Okay.
Bye.
Thank you. Bye.